Hi everyone, it's been a while since I've done a video, so I wanted to take a minute and give everyone an update on a couple of things that we're seeing in the headlines. The two main things being the Bank of Canada has increased its rate twice in the last couple of months, and then there are some more proposed mortgage changes on the horizon that I want to speak to and let everyone know what those are and how they might affect you or someone you know. So to start with, the Bank of Canada did raise their rate back in July. Somewhat expecting that. Maybe for me, I was a little bit surprised. I was more surprised by the rate hike in September. I know I'm not alone in that, feeling that way. There's a few other people I've talked to that were also surprised. The reason the government is saying they have made those increases is they're saying the economy is trending to show its fastest growth pace in 7 years, mostly due to a recovery in oil and gas and consumer spending. They're also saying employment grew at its fastest year-over-year pace since 2013, and they are expecting solid job gains in 2018. So according to the government, they are feeling like the economy is moving forward and things are looking pretty good. So they in turn raised their overnight interest rate. That has impacted clients with variable rate mortgages because we have seen the banks follow suit and increase their prime rates, and we have seen fixed rates move up as well. I think that's a trend we will see continue, whether they raise again this year or early into 2018. But I think based on what we're reading, what we're hearing, we will see rates to continue to go up, hopefully slowly. Then the next piece is we talk about proposed mortgage changes. There was a lot of changes that came out almost this time last year, and they are talking about another mortgage change to the mortgage rules. What that would be is they want to qualify all borrowers, even those with 20% down, based on the higher rate, or what they call the stress test, which is currently 4.84, even though that's not what you would pay on your actual mortgage contract rate. This does or will have an impact on the housing market because it affects people's affordability. It affects people's affordability by approximately 20%. So if you could once qualify for $350,000, you now would qualify for under that $300,000 mark, probably around the $280,000 range. So it does have a big impact on someone's affordability. And now, potentially, even if you have 20% for down payment. If I speak for a second about what rising interest rates and these new changes, proposed changes, could do to the housing market, Moody's Analytics are expecting annual gains of about 1.3% over the next 5 years. Of course, if rates continue to go up and or these changes come into effect, I think that's probably, I'm not sure if we will see that. It'll be interesting to see what happens and if the government chooses to